As human beings, we really don't like uncertainty. We don't operate very well in uncertain environments. And yet that's exactly what the market is all the time. You go to the market every day and you have to deal with uncertainty.
You have to have a passion for the market. So you have to be able to think and you have to have a passion for it. Those would be the two personality traits that I would say are most important.
My fundamental knowledge is the first thing I go to. And I find that US indices react more to what the market mood is by the underlying fundamentals than a Forex pair would.
My play for the NASDAQ is one last run up to give this high a go.
The ability to go into a trading room like How to Trade and get perspectives from all over the globe.
We have everybody from everywhere that trades all kinds of different things, all at different stages of their journeys.
You truly get really a broad view of the markets and viewpoints that aren't necessarily the same. And always remember, there's somebody on the other side of your trade.
In my opinion, our far right, our outliers here are being wildly undervalued.
It's okay to be a beginner with us in our community, and it's okay to have some experience.
If you've got a community there and people around you, whether you're not necessarily just talking about the markets, but you're talking about something else to take your mind off it, that community feel gives that.
We have a fantastic academy. You don't get educational content that runs alongside prop firms and live streaming and experienced members as well with trade ideas. You don't get that unique combination all in one place that often, and you do get it with house trading.
And that's really powerful, I think, in terms of having that course in front of you that you can learn from and perfect, and you can tweak fit to how you feel suits, and then become funded from that.
And be a true entrepreneur, really, and try to level up in life.
It's just a question of applying it and then the trade ideas that come as a result of that, and then all of a sudden, bang, you've got a great trading edge.
Get good at one market. Get good at one type of analysis. Get good at what you're comfortable with.
It doesn't matter what you're doing. If you're persistent and you're willing to learn from your mistakes, you'll get there in the end.
But you always come back to the table, and that's how you know you're a trader, when you're always there.
Hello everyone, a good afternoon, good morning or good evening wherever you are watching from. It is my pleasure to bring you this US non-farm payrolls event live to you. What a couple of days it has been. Good to see everyone. We are live on YouTube as well. Of course, this makes this stream a little bit special. So hello to everyone on YouTube as well. Thank you for joining me today. Let's make no mistake. This is an absolutely massive day. It's going to be huge. Okay, we're going to go through what it is. You know, for some people this is their first non-farm payroll event. We're going to go through what it is first of all, the theory behind it, look at the forecast, look at the numbers, what that could mean for the markets going forward. As you can tell, I am doing this solo today with my two amigos Nick and Shane, which is sad. If you were with us last time though, you'll know all about what happened. If you wasn't, check out our reaction and also the market reaction to what was an incredible jobs number.
517. Wow.
Good Lord.
What?
That's a major right there.
Wait, did I just hear that right? 517?
517. Wow.
That is major. My goodness. Wow.
So you could say we were we were surprised by that, and obviously the markets were taken by surprise by that as well. You know, that's why we love trading. It was a huge number. It was a huge jobs number going forward. So anyway, let me just say hello to the trading room. Good to see lots of action here. Conquer, Alpen Cleaner. Hello to you, Nick. Thanks for joining me. SH Mullen, Bruce. Stanrex, good to see you. Barnacle, Jeanette, BT King, Evelina, the usuals, we're all here. Martin, DRM, Hamish, Phoenix Blaze, hello to you as well, and good evening to you, Mantis. Thank you for staying up. I know it's late where you are. So yeah, today is huge. We're going to go through. It's normally huge anyway, but it's extra huge now. We're going to go through why that is the case, especially with Powell's comments in the week. But just first of all, Hello to you, Shane Veneer. Good to see you. Thanks for joining me. I know it's early where you are. Thanks for waking up nice and early to join this today. You couldn't miss it, really, could you? So let's just have a look, first of all, for those who are new to trading, or this is your first non-farm payroll event. Let me just quickly go through the theory. I know we go through it quite a lot, so some people have heard this before, but it's good to have a little refresh anyway. So essentially, normally on the first Friday of every month, the US Department of Labor's Bureau of Labor Statistics releases an employment report from the previous month. So for February's release, you'll see the jobs report for January. For March's release, you'll see it for February, and so on. It's actually a week late. It's actually not the first Friday of the month. I still have no idea why they left it a week late. I suppose it adds an extra bit of spice onto this. This is always interesting in any climate. It's regarded normally as the most important event of the financial month, because within this jobs report, the public has access to pivotal information on wages, job growth, and unemployment. And the three releases are officially called the non-farm employment change. That's the big one. The average hourly earnings and the unemployment rates. It tends to be released at 1:30 p.m. UK time, my time, and of course sends shockwaves throughout the financial world, as you just saw by that reaction there. Let's just quickly, we've got 12 minutes to go. We're just going to explore the payrolls quickly. So the non-farm employment change, that's normally the driver for most of the volatility that we see on a day like today. It will show the change in the number of people employed during the previous month. And the reason it causes so much movement is it's not just because it's vital economic data, but it's also the first sight of employment rates for the month. Second, we have the unemployment rate. This will show the percentage of the US workforce who are unemployed, but they're actively seeking employment. This is the one to go to if the jobs number is slightly ambiguous. That's how we tend to do things here. And then finally, we have the average hourly earnings change. That's the leading tool to analyse, one of the leading tools to analyse wage inflation. And you'll hear a lot of that language coming through. That's remained quite sticky. And the burden, the reason that contributes to inflation is because the burden of higher prices is normally passed on to us as the consumer. We're the ones that suffer. So that's the theory behind it. That's that out of the way. We've got 10 minutes to go. What are the numbers that we're expecting today? I've seen a few forecasted numbers around. I've seen a consensus for around 205k. There's a forecast on Forex Factory for 224,000. Previously, as you can see, 517,000, which completely shocked us and shocked the market. Let's say we forecasted this time around for around 220,000. The unemployment rate, 3.4%. That's expected to stay at 3.4%. Decade lows we're talking about here, still extremely low. And then the average hourly earnings, 4.4% previously. This time around, 4.7%. I think the key factor is here, is there room for a dovish surprise? I think in general, because of last month, we are sort of leaning towards everyone's expecting some strong data. Could very well be the case. We have seen strong data across the board. But I always try and think to myself, where's the pain trade? Where's the one which will cause much surprise? It's going to cause a surprise anyway. And I think maybe a more dovish number. And that is positive for the stock market and negative for the US dollar. We have had a poll in the trading room for the NFP predictions for the jobs number, and the number that's won today is between 181 and 230,000. I'd consider that fairly in line, I know, but sort of fairly dovish. I'm treating in line as more dovish today, even though generally speaking I have been a bear on the stock market for quite some time. Let's just have a look at the situation and the story we've got at the moment. So these are the figures that we've had in each part of the data we're going to get today. So that non-farmers payroll, you can really see how that was starting to be in the direction the Federal Reserve wanted it in order a softening to really bring down that inflation. But then we sort of got that huge spike, which sort of took everyone by surprise, which makes this reading so fascinating to see where we end up. You can see the unemployment rate as well is going, well, probably in the direction the Fed doesn't want it to go. No one wants to cause unemployment, of course, but in order to get inflation down, we need to see a softening of the labour market in the US. So that's heading in the wrong direction, really, if I'm being completely honest with you. Average hourly earnings, they are decreasing. You can see that month on month, we've seen that gradual decrease as the Federal Reserve has hiked interest rates. Okay, 8 minutes to go. This is the sort of roadmap that I've got on here to suggest maybe what sort of reaction we'd get with each different number. So let's just look at the non-farm payroll. That's our first point of call, that jobs number. So I think personally a hawkish number, which would be stocks down, dollar up, 250k. I'm going to put it out there. I think that needs to be the number in order to be hawkish here, in my opinion. And I think somewhere around the 205k would be treated as dovish. If we get somewhere in the middle, we get somewhere between 205 and 250,000, then let's just use that as an unclear number. Probably there's going to be a lot of chop and churn anyway, but expect a lot of market volatility and chop and churn if we were to get that ambiguous number in the middle. And then we could potentially look to that unemployment rate. We're looking at around 3.5% as being that hawkish number, as that stocks down, dollar up number. And also that dovish number really being around 3.3%. I've put them in there. And then we can look to the hourly earnings as well, which obviously does hold some weighting. I'm thinking around 4.8% as being hawkish and 4.5% as being dovish. Now, I was stacking up and I was thinking the reason why this feels bigger than it's felt before. It feels to me like the biggest day of the year. It really does. And it's because when we actually think about what Powell said in his testimony, which we're going to get up just a second here. Testimony in front of Congress this week, Jerome Powell spoke about the semi-annual monetary policy report. He got quite a lot of heat actually placed on him in regards to policy decision and what the Fed's going to do next, etc. And the reason why this is now a huge jobs report is because he said it himself. He's literally said that they have not made any decision on what the interest rate hike is going to be. So we're now sort of like, are we going to get 50? Are we going to get 25 basis point hike? He said we've not made any decision. He admitted they were wrong in thinking inflation was transitory. And then when you look at what he said previously as well, up here, in his first testimony, he basically said, and quotes, that we need to see some softening in the labour market in order to be sure that inflation is going to be falling down. So if they don't see that today, what could that mean for the markets in general? Well, I'd expect the markets to react sharply to the downside if we don't see a softening in the labour market. With that being said, if we see that jobs number lower than forecasted, then we can really expect some springboard action. What a couple of days it has been already. When you consider, obviously, last night, the whole Silicon Valley Bank chaos that's sparked across the banking sector, that's caused this move that we see in the stock market. This is the NASDAQ 100 chart. Look at that. We've got the unemployment claims stronger than expected yesterday. That's why we saw that run up in the stock market, but then we just absolutely slumped to the downside. Where we're trading now, we're sort of hanging on. We're hanging on around here. There's definitely room either side. We're not in sort of any overbought or oversold territory here. On the NASDAQ, for example, if we just scroll that down onto a 5-minute chart, generally speaking, we had that gap over the weekend, which yielded a nice short-term sell. But generally speaking, you can see we're in this consolidation and we're in this holding pattern, which just means that we're shaping up for something pretty big indeed. I know a lot of people on YouTube, I've seen the comments, want to have a look at the gold market as well. This tends to react a lot to this jobs number. Now, if we look at it from a 4-hour perspective, you can see that basically what happened here, and for those in the trading room, we managed to catch a really nice sell from this supply zone down into this demand zone around 18.12. Then we've started to see the reaction, but again, is there much momentum here? We're seeing a lot of wicks. We're seeing a lot of sellers come piling in at any opportunity. Do we get a hawkish number today, which would be positive for the US dollar, and that would slump gold a lot lower? For me, when I think about the short term, or I think about the market structure that we're seeing, yes, we've broken this high to the top side, but do we come and close below this sell side liquidity? Do we get a close today below 1800? Because that would spell trouble for this gold market. You can tell that the markets are active because of this. the VVIX. This is the volatility of the volatility index. You know, look at that huge run up from that banking sector. Remember, this move that we've seen in the last day or so is nothing to do with the NFP. It's all to do with this Silicon Valley banking chaos, crisis, whatever you'd like to call it, overreaction, if you like. So that's why we've seen such a pickup in volatility. Generally speaking, you know, are we in restrictive territory here in the short term? You know, are we shaping up for a dovish surprise to the downside in this VIX? That's the volatility index. If the volatility index falls, that's positive for the stock market and vice versa. Or when we look at it from a daily perspective, you know, are we going to make a new high here on the VIX? That would spell serious trouble. Massive closes here on the S&P. We've got 2 minutes to go. Massive closes here yesterday on the S&P below that 200-day moving average. We can see that exactly the same in the Dow Jones. Again, closing below that 200-day moving average. Are we moving into a more generically bear market? We are in a bear market here at the moment already, but we're just starting to clear out these lows, and I'm wondering whether this is the start of a more generic move to the downside, but it could be the case. As I said, it's so dependent on this jobs data. Powell really is focused on this jobs data. That's going to decide what the Federal Reserve does on March the 22nd. So we've got 1 minute to go. I'm a bit nervous. I'm a little bit nervous. I'm not really sure what's about to happen here. So we shall see. I'm just going to get the sort of the 1 minute chart up here just so we can really gauge the reaction. So I'm going to hold tight because I know we haven't got long to go. So best of luck everybody who is trading this event. We're prepped, we're ready to go. Keep your powder dry. Unless you're already in a trade, think about moving that stop loss. Good luck everybody. Moving higher before the release. Big spike up higher. Wow. Huge spike higher here, but then look at that reversal. 311,000. Ooh, that's pretty strong. Look at that. All those highs, all those buy side liquidity. Look at that flushed out. That's a strong number here. We shall see how that one reacts. 311,000 as the jobs number. Pretty big, but we're seeing a dovish reaction here. That's pretty surprising. What's happening with the gold market? Look at that gold spike. Woohoo. Now, if I'm being totally honest with you, 311,000 is definitely a hawkish number. I don't buy a rally off of this. You know, I don't agree with that at all. We're looking at the unemployment rate. That's at 3.6%, I believe. So there is an uptick in the unemployment rate. So that sort of maybe is counteracting that. We did see unemployment claims up yesterday as well. So, you know, it's a bit of a mixed bag. We've got a hawkish jobs number. That's the number of people employed, but we've got more of a dovish unemployment rate, which is obviously higher unemployment rate, more people out of work. Interesting. VIX is dropping off quite a bit. Look at that VIX reaction. Average hourly earnings have come in at 4.6%. Again, that's a little bit lower, and maybe that's why we're seeing this this reaction we're seeing at the moment. Now, what I would say is be very careful because that jobs number is still pretty strong. What does that actually mean for the Federal Reserve going forward? Does that mean 25 or 50? I don't actually know because that's a real mixed bag. But either way, some huge moves here. We're seeing nearly 100 points up from the release. Look at these highs and lows being flushed out here. I'm wondering how the market treats this. When we look at this on a 4-hour perspective, we're coming up into where yesterday we had that. We just got the sort of that block area. Do we come and reach 12,120? You can see this moving average cross here. It still looks pretty bearish to me. However, we shall see how this market reacts. Yeah, these are horrific candles, Liam. You're right. Yeah, these aren't good. There's a little bit of a mixed bag here. Wondering how the market reacts to this. Remember, we've got the We've got the whole shenanigans with the banking sector as well. Let's just have a look quickly at gold. Big spike up and reversal. Be very careful trading these candles. Be very, very careful. And also you'll find that the brokers, in a news event like this happens, the spread widens, which actually means the difference between the bid and the ask price is a lot. And therefore the actual entry that you're getting will be a lot worse. So just wait for these markets to settle. Let's see what that truly means. For me, when I'm looking at that, I think that's potentially I think that's quite a hawkish number. 311,000 is definitely going in the wrong direction. Unemployment rate ticking up slightly, but we've got to remember where we're coming from. We're coming from like decade lows here. Let's just have a look at those yield prices. Nick's saying 2-year yields are tanking. Oh yeah, look at that. Look at that sea of red on the yield prices. 2-year yields at the moment. Big move lower. Big move lower. That's positive for the stock market. Definitely positive for the stock market if we can continue that run lower. We are sort of entering though, yes, they are tanking. I fully agree, Nick, fully agree. However, all we've done, if we actually look at this, we're still keeping this structure here. We feel that imbalance. We're still keeping the structure. This could easily this could easily be an initial move in one direction and then a big reversal in the other. I definitely could see that, especially when we think about how much of a mixed bag this is. Nick, yes. Yeah, I would agree. Hawkish. When we will see the interest rate, when will we see the interest rates have an effect on the jobs market? Yeah, that's the question, isn't it? In my opinion, when you actually look at that, when you step back, you say, well, the interest rate hikes that are going on, they aren't really affecting the jobs market that much. Unemployment rates ticked up 0.2%. The jobs market is still very, very robust. I'm still looking, in my opinion, to fade any meaningful rallies we get in the stock market. They have been holding up quite well. We can see it is only US stocks that are up though. Bear that in mind. This is purely an NFP reaction. Globally, there's a real worry at the moment for what's going on within the banking sector. What's happened with Silicon Valley Bank. If you haven't looked at that, take a look at their stock price, down 75%. Show that for you now. SV. Look at that. Huge movements in the banking sector at the moment. A huge worry here, and this could really feed into global stocks. That's why I'm not particularly getting behind the rally that we're seeing. Let's just have a quick look at the US dollar, which seems to be, falling, as people have said. Yeah, Bryn says we're possibly looking for any excuse to see stocks rally one more time for people to get in. Yeah, I wouldn't say you're wrong there. To be fair, we're gonna have to get a time where where everyone thinks we're in a bull market, and that's when we're really going to potentially see a reversal. But I'm really interested to see how this banking sector thing evolves. Definitely. Now, when we look at the US dollar, we can see we did break out to a new high. This is still bullish, okay? So I know we're trading lower here. However, all we're doing is we're coming in and filling this imbalance. If we can get anything, maybe even somewhere around 104.6, where we've got this 100 moving average, simple moving average coming in, maybe that could be a catalyst for this market. Okay. So yeah, across the board, fairly mixed bag we've got. So I'm just going to have a look at the typical, my wireless mouse has stopped working, so I'm going to have to use this for 2 seconds. Okay. I've had a YouTube question come through. Let me just check that. Connor, do you think the bottom is in for crypto? No, that's a good question. Let's just have a look at crypto. Okay. In my opinion, I'm going to say it now. I'm going to say no. I don't think the bottom is in for crypto. You can see that we're sort of getting a little bit of a spike here from the NFP. That's just a risk asset buy in general. What I would say is, for the person who asked me that on YouTube, 200-day moving average here coming into play on Bitcoin. Do we get a break below there? If we do get a break below there, I do think we're going to unlock somewhere in the region between 17,000 and 18,000. And if I'm being totally honest, I think potentially in the medium term, I think 15,000 isn't the lowest that we see on Bitcoin and in crypto in general. Am I a big crypto? I'm not a crypto trader. Have I invested in crypto before? Yep, I've fluttered with these that you see, Quant, XRP, ETH. I don't have them anymore. Got rid of them sort of January last year. So I'm still keep my eye on it. My issue is I'm an economist at heart. So I think, is there any real intrinsic value here for crypto? What is the value of it? It's very, very difficult. That's why I prefer to stick with what I know. To answer your question, I don't think the bottom is in for crypto. However, shorter term, do we get a close today above that 200-day moving average? That could lead to a little spike up, and that 20,000 level is really, really important. Head and shoulders expected on Bitcoin. We could definitely see that head and shoulders pattern coming in as well. Okay, so the Nasdaq is up the most across the three indices, but we are looking like potentially we could start to reverse it. Do we run into this resistance here? We could see. Let's just have a look at that 15-minute chart. It's not the strongest rally. I don't think it looks particularly reliable. ARK says I don't think anyone traded this craziness. No, probably not. I'm going to wait for the markets to settle down, and I think that's probably best for everyone else as well. Okay, so just to recap, 311,000 on the jobs report, 3.6% on the unemployment report, and the average hourly earnings up to 4.6%. What we're going to do now is we're going to run the raffle before we call it a day there and really let the dust settle. So this is the raffle. So 3 lucky winners will be winning $1,000. And yeah, best of luck. We're going to launch this now, if it works for me. So your username will pop up. Who's it going to be? Congratulations to Stan Rex. You just won $1,000. Congratulations to you. Spend it wisely. Very, very well done. Congratulations also to Kathmandu 9999. You're also our second winner of the $1,000. Fantastic stuff. Really, really good. Happy Friday. And also happy Friday to FAHD at 267. You are the winner, the third and final winner of our $1,000 prize and our raffle. So congratulations to you 3 winners. Please get in touch. Very, very well done. So then, we're going to wrap it up there. If we look on just one last look, we're holding on to gains here. The markets are really, I think, holding on to a false hope that this counts as a softening of the labour market. I don't think it does, to be honest with you, but we shall see how the markets react. Be prepared, I think, for potentially a reversal here come the end of the day. Anyway, it's been a fantastic week in the markets. Really just action across the board. Next week we've got US inflation as well, and European Central Bank action. There's loads. There's loads next week. So we will be back next week as always. 6 streams per day in the trading room covering everything in the markets. So if you're on YouTube and you're curious about joining, come and join us if you like. Visit our website at www.howtotrade.com and you'll see the trading room there, which you can join us every single day. So that's it from me today. It's been an absolute pleasure covering this non-farm payrolls. Fairly hawkish number in my opinion. We shall see how the markets react. Anyway, trade the action well for the rest of the day, and I hope everyone has a fantastic weekend. Thank you very much.